For the first time since 1928, the stock market has done this. 5 days up, yet the advanced decline line was down every single one of them. What does this mean for us as investors and traders leading into 2025? Should we be concerned? Is it the beginning of the end? Well, in today's video, we take a look at the data surrounding similar topics such as this. Also, as we look at the options market, it looks like positive gamma flow continues to take over. Yes, we suspected this would happen on Tesla last week, and we may be looking at an all-time high very soon. Meanwhile, Bitcoin and of course Wall Street were very engaged last week, pushing through 100K, and then a dark pool trade came through, creating the first flash crash we've seen since the election. Are there more to come? More importantly though, are there other opportunities other than Bitcoin? And could this signal a point of underperformance for the world's biggest coin? Well, as we've been discussing now for a couple of weeks, we've been talking about Ethereum, and it just broke out big time. So let's go into everything we need to know right now about stocks, commodities, and cryptos for the week ahead. Guys, smart money's doing something very interesting, and we need to be paying attention. Join us for this special video. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we need to discuss what happened on the jobs numbers, what's going on in the crypto markets, and of course, why we're seeing a sea of green in the big stocks, but not in the others. Is this a cause for concern? Is Wall Street buckling up? Well, let's get started by discussing a couple of things. First up, I want to begin with the Smart Money Index. It's been a while since we've had a look at this, but of course, it's still doing the exact same thing that we've suspected all year. Every dip is being bought by the biggest money. And this is why when we saw those sells in August and we were talking about it here on the live streams and of course the daily shows, we were so overwhelmingly bullish. But now it still seems to be this way, but there are causes for concern. And of course, one of those has to do with this last week we've just seen. Yes, we were up overall. The SP 500 actually rose 0.96%, but the average stock actually dropped 1.37%. Now that's kind of weird when you think about it. This is the first time it's occurred since 1928 in consecutive days, and this is a fairly big deal. Worst sector was energy, best sector was consumer discretionary. Now, I think it's important to focus on that one, consumer discretionary. We just saw Black Friday and the sales came through very strong. This is pointing towards a still heated economy where people are feeling actually even more confident to spend. But is this a symptom of where we are? Well, we've discussed this for a while. We've talked about the, obviously, movements in the markets, but more importantly, we've talked about the uninversion of the yield curve and some other warning signs that have started to put us on what we call timers. But let's take a look at the similarities between now, and this is obviously 3 consecutive days higher with less stocks actually increasing. But have a look at these periods in time. There's the 1920s period. Guess what? Went up a lot more afterwards, but it was still closer to the end. We take a look at the 90s period, we got a similar read. We ended up ramping even higher after that. And even in the 50s, we ramped higher after that. Now, if you've been watching the channel for a while, you would know that we've caused a lot of similarities between the 1990s and the 1960s period that I've highlighted here. We tend to see markets rip higher, go beyond people's expectations, and obviously make a lot of people usually insolvent. Remember, markets can stay irrational longer than you can remain solvent is a real quote, and it means a lot to us as investors and traders, especially if you're trying to bet against this market. If you were heavily bearish, especially over the last 6 months, you've been getting your face ripped off when it comes to selling. So please be careful out there when it comes to going against this, even if you do see some of the bear things that we'll talk about just in a few moments. It's when do you need to be concerned about these that becomes the most important fact, and we'll be covering it in 2025, so make sure to subscribe to the channel for that. Let's talk about breadth though, because of course, when we have 5 days of advanced decline line down, yet we have the stock market still going up, firstly, it tells us the biggest stocks in the world are obviously ripping, and they certainly were. We saw that on the first screen. But overall, what it really is telling us is that we need to pay attention to this, but it doesn't necessarily mean the high is now. In fact, the lags tend to be quite substantial in markets. And remember, for the big guys to sell all of their positions to us, the retail traders and less sophisticated traders, it can take them time. It's not easy to get rid of tens of billions and hundreds of billions of dollars in the markets to retail traders. You've got to convince them, and then you've got to get rid of it. And that's to say, even if we are at the highs. So let's talk about the lag here in 2007, probably the most notable one. 18 weeks from the advanced decline line high to the S&P 500 high. This may be worth paying attention to over the next year. And of course, we will be doing so on the channel here. Now, there are a couple of other bearish signs, and we'll go through the bull ones in a moment when it comes to the markets. This one is pretty common now. A lot of people talking about how many record highs we've seen in 2024. Very strong market, 56 plus, maybe even 57 now. And overall, this is putting us into territory that we haven't seen in a while. The 90s period, the 60s period, 1928, sound familiar? And obviously a ton of new highs. Now, as we saw in the studies, it's important to put everything in context. Yes, we've seen a lot of new highs, but we didn't see so in 2023. So usually what had happened is we'd see a lot in the previous year as well. And I think it was on average like 96 across 2 years. And this was telling you that the market was super bullish and had probably gone through the bull cycle period for then. Now, 56 by itself is not going to do it. Generally speaking, this means that there are still more to come in 2025. But if we hit a lot in 2025 as well, let's say we hit another 50, we've seen 56 in 2024 or 57 or 58 or wherever it gets to, would I be terrified? Yeah, probably. I would certainly be paying attention to that stat. So remember, you've got to go and do the research and cross-reference some of these stats. And I like to think that we do it here for you guys. Obviously, spend a bit of time making sure this stat stuff actually lines up, because if you've got the wrong stuff, it's not going to help you out very much. You've got to get that edge. Percentage of stocks that outperformed the index. Now, a lot of people saying, well, what will we see do well in 2025? Well, of course, deregulation is the storyline. And actually, traditionally, in a year that's been led by, let's say, smaller numbers of stocks, such as 23 and 24, we tend to see the small caps and a kind of like a buy everything rally come through. So will 2025 be the same? Well, that's exactly how it happened in 2000. So of course, everyone started to buy the end of that rally and just basically bought it all. Now, you may be familiar with this chart. It's starting to make the rounds or something similar to this, which is the updated EPS adjusted for 2025. And when you look at two things, number one, the PE ratio, which is obviously hitting into 25 territory, 19 to 20 for the 497 stocks in the S&P 500, and obviously like 28 plus when it comes to the Mag 7. This is getting up there. I mean, this is basically what the second highest of all time, and certainly something that causes a lot of fundamental analysts to have a lot of concern. This market, how can it be at these levels? What the hell is going on? Remember the quote, markets can remain irrational longer than you can remain solvent. While it may not make sense to you maybe on paper, it makes a lot of sense to the market, and momentum is flowing in. Remember, people have to be trapped ultimately, and markets are loving what they're seeing still at this stage. And we'll explain that in a moment. But EPS has been downgraded. Don't think though that this means, oh wow, we need to sell the market. Remember, if the stock market was actually thinking that, it would already be adjusting. Over here, we see EPS actually going up, yet the stocks were already starting to float off. And this is really important because, people think that this has to go down and then therefore everyone's going to be selling the market. It's not necessarily true. Remember, they can upgrade it, and they generally do at different times of the year. And if you actually overlaid all of them together each year, 23, 24, 25, which we may do in our next video, then you'll see a very different storyline. Again, cross-reference some of this data. Speaking of data, S&P 500 seasonality. We saw a pretty okay week. In fact, statistically, it would usually be down. And funnily enough, if it wasn't for those Mag 7 stocks, we probably would have been flat down sideways. So that's interesting. You can see here, usually the start of December comes a bit shaky, moves up, goes down into the middle of the month, and then traditionally rips higher, usually led by IWM. The small caps tend to do well over this kind of Christmas Santa rally period. Now, that's to say if we follow that similar path. And of course, that chart's from Grant Hawkridge over on X. Grant's a good guy if you want to give him a follow. But will December be positive? Well, the stats say yes. At this stage, things are looking very good. Year to date, we're over 20% leading into December. We tend to see a 90% correlation with the month overall being up. Now let's talk about jobs numbers, because they came in with some interesting stats. First up, 227,000 jobs. Now, as you guys know, I absolutely don't believe these numbers, and rightfully so. How many have we seen revised down this year? Almost everything. But this is where December, or November in this case, was a little bit different. two revisions up. We posted this over on our X. September was actually revised up 32,000 jobs, and October was revised up 24,000 jobs. Now, that's a big deal. When you take a look at it, this is actually extra jobs added in instead of taking them away. The first time we've seen that pretty much all year. So a rare time indeed, but as always, take this stuff with a grain of salt. I think clearly the main trend is that we do have a weakening labor market. And that's really engineered by the Federal Reserve. I mean, this is exactly what they wanted. And you can kind of see here the general trend, in my opinion, has kind of started to sour a little bit. We will have to continue to look at this because this will be the storyline. Take a look at where the jobs still are coming in. Is it actually in retail trade? Well, funnily enough, it's not, even though the numbers look pretty good. And that's probably because online is making such a big deal of it. But you'll notice here that we've got private education and health services still showing the number one jobs. Leisure and hospitality, which tend to be the ones that drop first. Of course, that's where a lot of job increases have come in. And government, which, depending on how you look at it, may drop off substantially in 2025. So this is going to be a very important chart. We got to keep paying attention to that. And that's, of course, charts thanks to Mish Talk. Let's move over now to why people are so bullish. A lot of it has to do with GDP revision ups. It overall looks like the US economy is booming. And you may disagree or agree with this statement, but the market doesn't really care what any of us have to think. It's just like, you know what? I'm thinking good times are ahead and momentum is on. Let's pile in, guys. And more importantly, let's start to take leverage. Remember, leverage is going to be a huge component of how 2025 trades, and it's a potential buy everything style market. So people are buying trash again like they were in 2021. And this is, of course, becoming the symptom that we've been looking at here post-election, which has been buy hypergrowth stocks, buy weird memes, and of course, buy the cryptos. And that probably hasn't ended yet, as we've seen with Ethereum starting to break out. Year-end 2024 path, we already thought 62.40-ish was going to happen. 63 is now the standard call from JP Morgan, Fundstrat, everybody else. Let's move over to crypto markets, though, before we go back to the stocks. Guys, this is still happening. It looks like the crypto market is just starting to get its feet. We moved over 100. We saw that sneaky, nasty move from Wall Street, which we'll talk about in a moment. And of course, we'll expect more of that in 25 and the end of 24. And we still think that it's a risk-on market. So basically, people are prepared to take crypto. The asset funds are starting to buy it up. And this is all kind of falling into line with the standard phase theory. Phase one, Bitcoin, well, so far so good. 100K plus reached, absolute fever. Then all of a sudden, Wall Street dump it off. Could we be in a holding pattern for Bitcoin? I certainly think we could. With the sell-off past the 100K, the way it looked, it kind of looks still like what I call a pit or a pullback in time. And then potentially the market will move up to that next level, which is that 120, 130K. Do we think that we're going to reach that? Yeah, I still think we will. And of course, we've been talking about this for quite some time. Ethereum, yeah, this is an interesting one because large caps in Ethereum have started to pick up. Alt season's probably not here just yet, but they're all starting to fire a little bit. But Ethereum was the standout when it came to the last couple of weeks when you're thinking about specifically overall rotation. Of course, yes, XRP and Tron did way better. And that was all the old coins. Basically anything that was made and minted around 2016, 17, that kind of area, that first bull run, seems like people were buying those. So what's going to go next? Could it be the 2021, 2022 crypto coins? Well, it certainly makes sense. I mean, first up, we buy stuff that probably some of us not even that good. And then second up, we move into the next one and then so on and so forth. And this kind of brings us back to, will we follow a similar path to previous times? Ethereum is well known to do okay in December, but technically most of its gains come through Jan, Feb, March, April, and May. In fact, it usually outperforms during these periods of time when we look at 16 to now. And you'll notice here it's the same thing no matter how we look at the data. Basically, it's a Jan, Feb in particular being the strongest 2 months. And that's all going to go into the hype of course, inauguration, deregulation, discussion about crypto. It's going to be a very interesting time for this market. Let's talk about this large transaction though, because as we see, yeah, Wall Street's playing the game. Maybe we need to forget the whales of Bitcoin and now we need to start paying attention to the whales of Wall Street. As we've seen with a couple of transactions, the biggest of all time, coming straight after the election, and of course, the second largest of all time in this particular ETF, showing us a flash dump. This will now be one of the most important reads we see in 2025, and we will be covering it together. So don't worry, guys. we've got your back. We'll all have it together and we'll all be talking about it. Now, do we continue to see transactions in the crypto markets? Yes. It just looks like there's more and more and more kind of positions coming through. And obviously, whenever you're looking at these kind of leveraged ETFs in particular, there's a lot of transactions that seem to be coming in from alt asset super funds and what we call super funds, but they're 401ks in the US. People are trying to get into these types of things with alt asset and purchases, and they're trying to do it in the pension fund. Now, traditionally, they've been doing that through MSTR. As you guys know, they're regulated out, but it's beginning to happen. We're seeing people with self-managed funds, with things that they can get around. They're starting to buy into these alt assets. Let's move over to a few other things though before we get into those charts. Let's talk about the semiconductors. We saw semiconductors start to ramp, and this was very important because semis have been probably the worst performing major market since around August, July period. And we started to see some large transactions coming in near the base. We saw a bit of a rip off this, and so far they've held up. Now, semis could be in for a bit of a run leading into 2025. And of course, it makes sense based on a few of the other videos and chart overlays that we've done. Let's talk now about this week. We still have a couple of earnings periods. We also have a little bit of news. You'll notice down here we have the CPI, which is the second most important probably piece of news per the month. Have we seen inflation kick back up? Got Adobe, which is a very interesting zone on stocks. We've also got GameStop coming out, which is expected to move 11.1% based on the options market. And then we have PPI on Thursday. So we're still in earnings. There's still a couple of stocks. If you're trading any of these, please pay attention to what the options market is telling us. Some large moves are potentially ensuing. Now let's talk about this advanced decline line. We've already looked at the stats, but just remember the advanced decline line has actually been declining over this last week. Now, we've also seen signs of what we think could be a little bit of a slowdown. And remember the standard December: down, up, down, small pullback, rally through. So will Wall Street be buying any dip? You have to think based on that smart money chart, it's going to be yes. They are still piling in to get their sweet Christmas bonuses and end of year kind of fun so they can eat their lobster in wherever they go, the Cayman Islands or something like that. Was it the Hamptons in the US? So they need lobster. They need it now, and they're still going to be buying those dips. And guys, even if we look at this, what is the worst case scenario right now on something like the SPY? Maybe 600. Why? Because even if that was to occur, we'd get back into this demand zone, back into the resistance. So you'd have resistance support traders there. You'd have daily 20 moving average traders here. You'd have bottom trend line kind of followers here. There's a lot to kind of like about those levels. So if we link about the futures market, you can see here. But again, I do pay attention when I get these overbought signals. It's not that I'm terrified, and I don't think we need to be, but I pay attention just because when we've seen similar times, we've generally seen underperformance, or at least like just a bit of a slowdown for a few weeks. Don't be expecting a face rip in the next week and everything goes absolutely ballistic. It's possible, but statistically less likely. Will that happen by the end of the year though? Well, you'd have to think so. I mean, we're at 6,100. And as you can see, if we move through that zone, well, yeah, things change. Have a look here at the call walls. We moved from a 6,000 call wall, which pretty much called for let's move to 6,100, which we've now done. So very nice. To a 6,100 call wall, which now shows if we move through that, where do we move to? 6,200. So effectively, we are looking at a very strong call wall again at 6,100. And this could slow the market a little bit. If we close above 61 though, you have to think it's going to feed upon itself. Zero DTEs have mattered in 2024. We've been following them together. And every time we've been closing above these super positive gamma zones, we've been trickling up and making our way towards the next most logical level. Speaking of logical levels, let's take a look here at Tesla because you guys are probably excited. We talked last week, we break 360. As soon as we get through there, where are we going, guys? 400. And that becomes even more relevant this week. And of course, if we break 400, yeah, it could face rip. So what that means is that the market is super bullish on the Elon Trump partnership. And obviously, we are seeing that kind of represented here in a very strong trend. And we all know that around 400 post-split is effectively the all-time high for this stock. And we all know that this will be where the market will want to gravitate to. And it's doing it pretty quickly, 389.20. I think anyone could have probably predicted that. As you break through 360, you're going to move to this area. but I did get quite a few people messaging me over the weekend saying, oh my goodness, those 3x Tesla longs. Well, guys, care on your leverage, all right? We all know that everyone's leveraging right now, and we'll talk about that in 2025. But at the same time, be careful. But people were making some significant money. If you haven't, don't worry about it. Always another opportunity. And that's the thing. That's the beautiful thing about markets, why we cover it here. Abundance mindset, guys. Never lose sight of this. A few weeks ago, people probably didn't even like crypto. They hated it. Now, all of a sudden, everyone loves Bitcoin. Then no one loves, 2021 stocks. Now everyone loves them. Remember, we've been following this. We've been looking at the arcade kind of breakout for a few weeks now, ever since the election. And guess what? There's been some significant movements in those 2021 stocks. And, it's just all about timing. It's all about finding the opportunities when they do arise. Speaking of another one that's going to be a big deal moving forward, will be the 148, 150 level for NVDA. Now, guys, we all know that this 150 has been absolutely smashed down every time it gets up there. It's kind of like 100K for Bitcoin. We moved through 100K and then it went crushed down by Wall Street, which we'll look on the charts. But the 150, 148 will be a big level. Worthwhile setting alerts and checking that out, because what's next in store? Well, Wall Street's main target, I think, is about 170 over the next 12 months. And of course, that can happen relatively quickly with that stock. US 10-year did drop after the non-farm payrolls numbers. Even though we had the revisions up, overall, I think Wall Street's just like, it was pretty much in line with what we suspected. So they managed to push yields down. Now, yields down means treasuries moved up a little bit, only holding 0.15 by the end of the day, maybe showing a little bit of exhaustion here. I wouldn't really get rid of them. I wouldn't really do anything other than just kind of hold the positions. But again, it just shows you every single supposed funding manager came out a few weeks ago, told you that treasuries were trash, and then they've gained every single day since. So remember, look at what they do, not what they do, what they say. If it's in the press, it's in the price, as we like to say. A great kind of little concept to remember. High yield junks continue to move up. And if we have a look at home builders, which we'll do right now together, you'll notice home builders have been weakening a little. Now, we will watch this into 25. If this goes and breaks below this 112, I'll tell you what, we'll set an alert together for that right now. I'll just set one over here. Then that is going to be, whoa, what's going on here in the markets? But for now, things are still overall okay. Dollar index fell below the daily 20, then rallied it straight back up after non-farm payrolls. Very tough to pick exactly what's going on here. Now, if you're a dollar bull, you just need to set an alert above here. If the dollar did this and now it moves above this 106.77, I'd say we're going to a new high for the dollar. And I'm still confused about which direction this dollar wants to go in. Now, obviously, we want a weak dollar for some of the other trades that we're looking at. But if you want a strong dollar, you just want to break that 106.77. That's going to be a huge deal. We'll continue to watch this closely this week. On the other hand, gold continues to be in the kind of buying area, and we'll see whether it can actually break to the upside. Probably going to need the dollar to weaken. And silver got close to the 31.50, but was not able to get above it. Still looks better. Silver looks better than gold at this stage. Still looking at that bull end. What doesn't look good, though, is I had to bring back oil. That looks terrible. Now, if it does end up bucking this trend and going up, and I'm not really trading it either way, I don't really care. It could go up, could go down, but at the moment, if I was looking at this chart, I'd say that does not look very good. It looks pretty weak. It looks pretty terrible, and it could actually move down a little bit more. So maybe you'll be getting cheaper gas at the pump very soon and moving down to like 63 or even into the 50s again. I mean, $60 a barrel is not off the table when it comes to this. And I think it's maybe a direct reflection of a few different things, geopolitical tensions, maybe starting to simmer a little bit. But at the same time, it's also the possibility of drill, baby, drill kind of concepts. Tesla breaking through 389, pushes a 407 is really the target. I think 407 more than 400. I know 400 is where the core wall is, but I could easily see it kind of going bang and then just like start stuffing around. But if it gets through this level, remember, it could be what we call a face ripper. So you've got to be very, very careful going against this. This stock, I believe, I would not short it under any circumstances unless you saw an Elon Trump fallout. And I've said that since the election, and I'll continue to say this for now. I do not want to go against this stock. I just think that this stock is a massive winner. Elon's the biggest winner, arguably, in the private sector, and you just need to be paying attention to that. Let's move over to semiconductors. They still look pretty good, holding up after those large trades went through over here. And as we know, NVDA had some massive trades around 137. This is all telling us that maybe semiconductors are starting to get a little bit more of a pump in. 148, 150 will be the key for NVIDIA. HSI, looking good, guys. Chinese stocks actually starting to move up. And this is off the back of seeing improvements in copper, improvements in obviously iron ore recently, and the metals markets. And look at this. It looks like it's trying to make it up again. Now, everyone dislikes this market a lot of the time. When they like it, you need to be terrified. When they dislike it, you kind of want to like it a little bit more. So we still like this level. It does look like day traders have started to come back in on it. So maybe we're going to see some large moves. And of course, China's continuously trying to stimulate it. It's a game, like we've said, cat and mouse between the markets at this stage. Who will win? Well, ultimately, China government will fold and do anything it can to support that market. At least that's the way I'm seeing it. But for now, they do not want to dump the yuan. And that's the key. They don't want to make that currency weak. So the strongest move right now is a weak US dollar to allow some of the policies to kind of have more effect. The Australian index, pretty good. Let's move over to the indices. Still looking good overall. Weekly was down a little bit, but still looking pretty nice. And you'll notice here it's just kind of been a bit of consolidation after those large moves. US 2K coming off the daily 20, looking okay. Still think this is going to be a pretty good sector to be in into 25. And for now, we're looking for a new high. Now, a new high will kind of show us that smart money is kind of buying down here, and they're ready to rip it and potentially get some nice movements onto that. And remember, another one to look at is that 2021 kind of stock thing, which is RK. We mentioned this a few weeks ago. Obviously, we saw the election move. As soon as that happened, we knew small caps and risk on was going to come through. And so far, it's been pushing higher. I'd expect the RK to go to 67 before it really has too many problems. And yeah, just another one of being able to see the different markets. Do I like RK? No, I think it's trash. But at the same time, it doesn't matter what we like in these markets. You've just got to look at the technicals, look at the flows, and understand. You know, I've always said Zoom sucks, but if you actually have a look at Zoom on a chart, and we've been actually following this in our private community for quite some time, have a look at how it's been doing. Since August, we started to see these improvements. This wasn't just a new thing. And remember, when Wall Street loved this thing, they were buying, and it was in the news, the greatest stock ever over here at $500. Remember Kramer? He literally came out and said, I love Zoom. Oh, well, you know, that wasn't so good. So there are times to own certain things, but you got to know what you're getting into. What are you getting into here? You're getting into a pretty low moat business that is mostly speculative, and it's coming off a low base now compared to what it was, but it's still expensive. So you've got to just remember that you're getting into a hype train, and you may not want to have it as a long-term hold. Maybe someone else out there does. Nasdaq did move higher, pretty good. Obviously, Nasdaq is ripping a little bit higher. I still see signs of potential kind of like sideways action for now, in line with that December period. You'll notice here, whenever we get these types of reads, we're just kind of like, yeah, you know, like a little bit underperformance at now, but that's okay. It's still very strong. Overall, if you were holding it for 3, 4, 5 weeks, it still looks pretty damn good. And we know that Wall Street is big on the buy at this stage. Let's move over to the crypto markets. Ethereum versus Bitcoin. Not bad, guys. Look at improvement. Now, this is a very important point here. And if we actually highlight it, you'll notice that we have a lot of resistance around this point. Now, if we go to a weekly, what you might see is that we're kind of holding, not so much perfectly holding, but certainly this 20 weekly moving average, the mean reversion, is, yeah, it's kind of a bit of a resistance. And we are coming into resistance here for Ethereum. If it can smash this versus Bitcoin, that is overperform Bitcoin by a decent amount, we could be moving back to a 0.06 ratio. And that's going to be a big deal, because 0.06 ratio, that means that Ethereum needs to put on quite a lot of market cap. What could we be looking at? 20, 30% upwards tick in Ethereum? Certainly very possible. Let's have a look at the chart itself. Very nice if it can hold here. We put a poll out. 56% of you were correct for the week. We said last week, will Ethereum hit 4K this week? And it did. And it smashed it. So it got straight into 4K. We'd like to see a weekly hold at 4,000 plus if possible. And then next stop, 46.29. You know, next stop is there. Will we get pullbacks into short? In crypto, it tends to be just like a flash crash out of nowhere that tends to get ripped up. But for now, you know, the momentum, the bullishness, the media, everybody's kind of going hypo. That's the type of stuff. I'm wondering when my son just went through the mic then. Let me know in the comments if that did happen. Ethereum overall still looking pretty bullish though. And guys, that is an exciting chart. And it just shows you again, follow what the flows are telling you. We saw the big market movement in here with dark pools. And of course, we've been following it for a while. Now let's move over to Bitcoin, the flash crash. So what large Wall Street transaction shows that they're in the game now. And then all of a sudden it flash crashed straight after that. Still very strong buying around that kind of anywhere really above 82 to 90 zone. This will be where the main buyers are. So whether it's MSTR or something else, they're going to try to buy this area. But realistically, Bitcoin's still melting up. It's still slowly moving through. I still think it's going to get to 120, 130, but the bulk, easy kind of level of money, yeah, that's been kind of done. That's not to say there's not more in Bitcoin. Of course, there will be, but we have hit $2 trillion-ish. When you hit this type of market cap, obviously to move every 10%, well, that's 200 billion bucks. It's not that easy to do. So as we see adoption come through, what we're going to look at now is hopefully beginning the movement into Ethereum. When we see Ethereum, then we can move into the alts. And I think you've got to put things in perspective. If you look at like a Tron, let's say, and we load up Tron here, you'll notice the thing went ballistic. Now, I would never buy that under a temp. You buy up here, you're crazy. Okay, that's, nice work. That's insane. But that moved already. Now, if you look at something like a DOT, which is not a 2017 coin, so it's, remember, more of a like previous generation, 2020, 2019, whenever it was. If we have a look here, you'll see, yes, it's rallied up, but it's still just sitting at those highs from March. And if we go back to the 2021 period, that's 42. So there's still upside in these types of ones. Now, I'm not condoning you go buy DOT or you buy NEAR or Protocol or you buy, anything else, XRP or whatever else. But what we did just see was mostly the older coins. So if we have a look at IOTA here, and that's a 2016 style coin, 2017, wherever it was, like over here, I think it has full history, you'll notice they've already broken through these highs. So not everything's completely uniformed. A lot of different coins moving at different paces, but still well underneath their all-time highs. And of course, Ethereum hasn't even made it back to that 4.7 kind of level, which we're expecting it to do so if these coin markets are going to continue to improve. Guys, a lot of people sending me messages about this stuff. I'm very happy for a lot of you. Welcome for anyone that's new. Hopefully you learned something in today's video. But yeah, it's all about abundance. Remember, there are lots of opportunities. Silver may power home if it gets through that key level we spoke about. Possibility of, other sectors in the stock market doing well. Small caps could do incredibly well in 25. They're always going to be a new opportunity. Even some subsections of the market, such as utilities. In 2024, no one was looking at that. We did very, very nicely. In fact, it beat the S&P for most of the year. So if you've enjoyed today's video, remember to subscribe, check out our X as well and give us a follow there. And thank you so much for watching. You have a fantastic rest of the weekend and let's get ready for another week in the markets. Remember, join us for the Monday Open. We'll be live streaming about 2 hours before the market does open. We'd love to see you there. Bye for now.